Hi everyone. I hope you have learned the previous indicators well. I don't have any problems. So today we're going to talk about the last part of the indicators, costume, which is the indicator that we have seen before, and we have it here as well. And it's written as an abbreviation, like the rest of the indicators. So in here I have some of the indicators that I use. These are very good indicators and I use them regularly, and I wanted to talk about this so you can use it too. So IH Fibo is the first indicator we're going to talk about. This indicator, when you're in your hourly time frame, it will draw the Fibonacci for you. If you're in the daily time frame, it will draw the daily Fibonacci for you. If you're in the 30-minute time frame, it will draw the 30 minutes Fibonacci for you, and so on. And I know a lot of people have problems with drawing the Fibonacci and they can't draw it accurately. I suggest you to use this tool if you have that problem. See, for example, in a 4-hour time frame, I have added this indicator so that it will draw the Fibonacci for me. And if I draw the Fibonacci myself, you see that it exactly overlaps the levels. You see that this is our 23 level, this is our 38 level, which exactly overlaps my Fibonacci. This is our 50 and 61 level as well. In this IH Fibo, it doesn't have the 23 level because the 23 level is not very important and powerful, and the important levels start from the 38 level. So it is not showing you the name of the levels. You have to understand that yourself, that this is the 38 level, this is 50, and the next one is the 61 level. And if I want to change the time frame and move on to hourly time frame, the Fibonacci changes based on the hourly time frame. As you can see, the Fibonacci was drawn from high to low. This is our 38, 50, and 61 level. Let's move on to the daily time frame, and as you can see, it has drawn the daily Fibonacci for me. This tool helps you draw your overall Fibonacci. If you want to draw a partial Fibonacci, you have to do it yourself. You have to connect your swing highs together and draw your partial Fibonacci. But if you want to draw the overall Fibonacci, you can use this tool. Another thing that we have here is that you shouldn't work on this. You have to zoom out so that the Fibonacci can work better and analyze better, because it draws the Fibonacci based on your swing highs and swing lows. So if you zoom in for 3 times, excuse me, the second zoom is the most appropriate situation for your tool to work. And I have told you this before. If you want to work on the market, you have to zoom out 2 times so that you can use the indicators and tools better. A technique that's performed in the IH Fibo is that if I compress the chart, I see that there are two lines below the chart at the bottom, and you don't see any other lines. It shows you that when two lines, when you have two lines at the bottom, it's usually in your hourly time frames or longer. It is telling you that the elasticity is downward. So these two lines tell you that you're going to have a downtrend and the elasticity is downward, and there is a possibility that your zero level is going to be broken and your resistances are going to be touched. If I move on to the 4 hour time frame, you see that those two lines are at the top now. A point that is here is that on any time frame that you're working, for example, in the hourly time frame, these lines and the Fibonacci shows us the elasticity in that time frame. As you can see, in different time frames, the elasticity is different. It will show you the overall Fibonacci and the elasticity in those trends, and it predicts you that in the future where the price is going to go. So that was the IH Fibo. Let's move on to the next indicator, which is Magic Pivot. Magic Pivot is a tool that shows you your resistances and your supports in the weekly chart. And I told you that when you're analyzing, you have to know that, for example, if you have started a buy order here in this area, imagine we don't have this. So how long is the buy going to continue its movement? You see, when it's going up in its way, it has many resistances that if it reaches any of these resistances, you can expect a retracement or the breakout of the resistance. So this tool locates your weekly resistances for you. So the magic pivot is for weekly resistances. A point about this tool is that it gets updated only once a week. It means that it will get when the market is closed on Saturday mornings. When the market is opened again on Monday, the lines get updated. But on Tuesday, Wednesday, Thursday, and even Friday, the lines are the same. They don't change. They don't get updated. So it's updated only once a week. So for example, in here, we have a support here, another support there. And if this support is broken, the price is going to reach the next support. Or, for example, you may have the question that why is this line more obvious from the other ones? It's because this is your central and most powerful pivot of the week. So these are your R1, R2, and R3 levels, and these are your S1, S2, and S3 levels. So when the price touches this S1 level and then retraces to my central pivot and breaks it, it's going to go up until the R1 level. Another important point of this tool, which is our first technique, is that It's a very important point. Please take notes so that you learn it better. So, if the price is able um, to be above the central pivot on Monday night and on Tuesday morning, it breaks the first resistance. It means that that whole week we're going to have an uptrend. And if on Monday the price is below my central pivot, and on Tuesday morning up until noon, around 11:30, it is able to break the first support or our S1 level. The weekly elasticity is downward. But you may ask if we can rely on this tool 100%. No. You see, on the market, we don't have anything that works 100% of the time. The most reliable analysis is correct 99% of the time. So there's always 1% left for errors. So if until Tuesday it can break my first resistance, the elasticity is upward, and if it breaks the first support, the elasticity is downward. So usually when the price is having fluctuations on my central pivot, I shouldn't trade. You're not allowed to trade because that means we're going to have a sideways trend. Excuse me, for the cuffs. The second point is that on 90 or 95% of the time, you shouldn't expect your third lines to be broken before Friday. So they will be broken on Friday evening. Doesn't make any difference if it's R3 or S3. You see, the market has just opened right now, and if you're online on the market, you see that the price is having fluctuation in this area, and then it reaches the central pivot, and then it starts resting here, and after that, it's Tuesday, and it probably breaks the R1 level. So on Tuesday evening, it reaches this, and it breaks, and now it's Wednesday. And on Wednesday, it starts to go up, and this area breaks on Thursday. And on Thursday, it is having fluctuations in here until Friday morning. And there's a possibility that on Friday morning or evening, it will touch this line here. A lot of the times, these lines have a lot of distance between them. It shows you that it's going to take a long time for your price to touch that area. And another point is that sometimes we see that the third line or our R3 level is broken. When this is broken, we know that the price wants to go up, and it's going to continue its movement until the next pivot. It's a very, very important point. When the price goes further than our 3 level, the price is going to continue its movement severely. And if the S3 level is broken, the price is going to decline severely, do a spike movement. These are one of the tools that are very useful. So the lines have been updated like this. You see, as you can see, on Monday it reached the first resistance, and right now the support is not letting the price to go further than this area. So this was the magic pivot for your weekly pivots. We have another tool, it's called the pivot. The pivot tool locates the daily resistances and supports for you. It means that it shows you, for example, today on Monday, what pivots we have. Pivot or magic pivot, they don't change if I change the time frame. They're always the same in all of the time frames, and they don't change based on the time frame. So let's move on to a shorter time frame. We have 3 lines at the top and 3 lines at the bottom. And also we have this green line here, which is our central daily pivot. So this is our R1, R2, and R3, and this is our S1, S2, and S3. Alright, so important points about this tool is exactly like the magic pivot. When the central pivot is broken and the prices have fluctuations above this pivot and breaks the R1, our daily elasticity is upward. And it's the same about the support. And this tool is the same. The R3 line is rarely broken. It usually only reaches the second one and then retraces. But it's different on different charts. Sometimes the R3 level is broken as well. So if it breaks the S1 from the bottom, the daily elasticity is downward. This tool is precise. I use it all the time and it locates the pivots for us. It doesn't have much error. There are some other tools that work the same. They have the same function and you can download it on your MetaTrader. So they will locate the pivots for you, but they have errors. And I have seen that this tool has a lot less errors compared to other tools, and you can use these tools and download them. I have put it in your second DVD, and I have told you about the rules. It's exactly like the magic pivot, and when the first resistance is broken, it's going to reach the second one, it's going to retrace to the first one again, and after that it's going to reach our second and third ones, and then it's going to retrace again. And it's the same about the supports. It's going to reach the first one again and then retrace and back and forth. And on Tuesday, these will get updated. They will get updated daily. So when the new chart starts to work, this tool gets updated as well. And another point that I forgot to tell you about the magic pivot on this one is that you see the resistance is where our downtrend was. How do I put it? You see which one of these pivots the price wasn't able to touch. You see this here is broken, and I've had this pattern. It means that the trend and the wave is on my resistances. This part of the the pivots, which are the supports, are empty. So whenever you see that your supports are empty, there is not a wave in them, and the price hasn't had any fluctuations in that area, it means that you're going to have a downtrend and your elasticity is downward. So for example, if the price had declined up until here and then it had gone up and the market was closed, when the market is opened again, the lines get updated and they move to a higher place. So then you can see that your resistances are empty. We have an example here. You see that our supports are empty. There are not anything on them. The correction, the downward correction, you have to pay attention that in which part of the chart it was. If it's if if it's in our resistance part, it means that our elasticity is downward and vice versa. And another analysis that I constantly use is that today is Monday and the lines have get updated. And on Tuesday, our resistances get updated and imagine they move to a higher place. But the supports don't change much. They may get moved a little bit, but they don't change much. But the resistances get too far away from each other and they may get updated to this spot. And it's showing me that the elasticity is upward on that day, on Tuesday. But if your supports get updated and they get far away from each other, it is telling you that on Tuesday your elasticity is downward. And if the supports don't change that much, they don't have any fluctuations and they stay where they are, it is telling you that your elasticity is upward. So I have told you all about the techniques of these tools. Please use them. But if you have any questions or problems, please leave a comment on the website. I will answer it for you. Let's move on to our next tool. I forgot to tell you some. Oh, no, I didn't. Excuse me. The next tool is TD2 and TD3. It's a very good tool. A lot of my students use this and it works out really well. And it has a little bit of error. You see, this tool can predict the future of your price. It's not like the other tools that will tell you what's happening at the moment in the market. Or it's not like that, it has a lot of errors. You see, the blue lines tell you that you're going to have an uptrend, and the red ones show you that you're going to have a decline or a downtrend. So the blue ones are for buying, it means that you should buy, and the red ones show you that you have to take a sell order. It shows you the sellers. That is an easier way to put it. Blue is for buying and the red ones are for selling. Um, you may ask this question that why do we have two shapes here? One of them is TD2 and one of them is TD3. You see, if I put it simply for you. One of them is one of them analyzes the chart for you, and the other one is a confirmation for you. You see, for example, you see that in here we have a red line, and also in our TD3 we have another red line, so they match together, and it's showing me that we're going to have a decline here. Let me locate it with this line here, and here we have two blue lines, so you have to wait until you have two lines. It doesn't matter if it's blue or red, but you have to wait to get the confirmation from both of them. And if I have two blue lines at the top, you see it changed from red to blue. So I won't trade on this. Wait for the next one. The next one is blue as well. So I look at the bottom one and I see that the bottom one is blue as well. So that is a confirmation for me that I can buy. As you can see, the price has gone up until here. You see, you have two red lines at the top. So until your blue line hasn't changed to red, you shouldn't close your order. If that happens, you have to exit the buy order and enter the sell order. So if both of them are the same color, that is a confirmation for you. You see, based on this tool, I could have gained around 700 pips of profit. You see, in between this blue line here, we have a small red line. It is a warning for you that you're going to have a change of the trend. So you could have had buy the bots there. But about the sell, you have to look at the TD3 first. No, excuse me, I was wrong. If you want to buy, you have to look at the TD3, and after that, for its confirmation, you have to look at your TD2. I'm very sorry, I made a mistake before. It's very late and I'm tired. It's midnight, so that is why I made that mistake. So in here, we have a blue line here, but at the bottom, it is giving me a red line here, so I have to exit there. You see, we have at the top we've had a blue line, but at the bottom we've had a red line, and it has gone like this back and forth. And after that, we've had a confirmation from both of them because they're both red, so I can start selling up until here, until we had blue lines again, this candlestick. So on this candlestick, we should exit the market because it's a warning for me. The color has changed, and we have also had the confirmation at the bottom as well, so we can start buying again and gain this many pips of profit. And again, on this part, you see I could have sold here. I took a sell order, and after that it has declined, and I have gained profits. And here at the top we've had a red line, but at the bottom we've had a blue line, so that is a warning for me that the price is probably going to go up. But at the top you haven't had the confirmation. You have to get the confirmation if you want to close the order. So if you have bought at the top of the chart, you shouldn't exit when you see the opposite signal in one of your tools, you have to wait for the confirmation and then exit. So in here it has given me a warning, but at the top at TD2 we haven't had any warnings here. So after that it has given me another warning, but at the top it didn't have any blue lines. It is red again, so I'm going to continue selling. But in here I have red lines and I have red lines at the bottom too, so I have to start selling. So I can sell here safely and put my stop loss where the price has been closed. Or when I'm online on the chart, when I see the warning, when I see the blue lines, I will be careful, and when I get the confirmation, I will close the order so that I don't lose. Always determine your stop loss, because if suddenly a news is published or something happens, your account does not call margin. Another point about this tool is that when we're in our hourly time frame, this tool works. When I'm on my 4 hour or daily time frame, it gives me a new analysis. For example, in our hourly time frame, I have to sell. So in each time frame, it gives me a separate analysis based on that time frame. So it's a very good tool. I have seen other people using it and I have used it myself. And when a news is published, suddenly it gives you the warning. One of them gets blue, for example. So in here, I can start selling safely. But for example, I wasn't paying attention to the news and I entered the trade without paying attention to the news, but then I can get the warning from this tool. So that is the error that this one has. But in the markets that don't have many fluctuations or news, it works out very well. There is another tool here that can determine your take profit and stop loss for you. It's called a stop loss 2. You can use these two together. I advise you not to use it, but if you want to use it, try to use these two tools together, because both of them they get updated. They will get updated when these red lines turn blue, and these two will change as well. For example, in here, this is telling me to put my stop loss in here, 21 pips lower. Actually, I have to consider it from here. Yes, like right here. I have 21 pips in this area. So it is telling me to put my stop loss here. And it is telling me to put my take profit 43 pips higher. No, I have to, excuse me, I have to move them. I have to put my stop loss here. I have to consider the point where I have the confirmation for selling. I should put it here. This is my stop loss. So I should put my stop loss here. And I should put my take profit, it is telling me I should put it 43 pips lower. So 43 pips from here would be this, because my price is right here right now. So I have lost part of this analysis. The take profit and stop loss is for the beginning of this analysis. So if you want to or enter the order in the middle of the analysis, this doesn't work out really well. It only works out if you're at the beginning of your analysis. So if you have lost part of the analysis, try to be online on the market, and whenever the signal changes, you can close the order. But if I change the time frame, this also changes based on the time frame. So those were all the points about this tool. It's a good tool. You can use it. The I hadn't talked about the zigzag tool. I will talk about that as well. You see, the zigzag tool will show you the waves, and based on the waves, you can predict the price. There's Elliot's methods that you can use. It shows you the swing highs and swing lows, or you can also use Fibonacci based on this. So for example, a zigzag movement was started from here to here, and as you can see, the Fibonacci performs here. It has reached the 50 level, and that it has gone up. And after that, we can draw another Fibonacci from here to here, but this is not our final wave yet. If we had a final wave there, a zigzag would be formed here, and the next one would start to work. So this is kind of a correction here. And I've seen a lot of people using this to count their waves and draw their Fibonacci better, or identify their Elliott waves. But if you want to draw your Fibonacci, try to draw it based on the waves and fractals that I told you about. For example, if the price has declined up until here and retraced, you can use the Fibonacci. I hope you have a good day. We're going to talk about the Ichimoku method next session. So I'm going to start it from beginner level to professional.